Well, good afternoon, everyone. It's Tuesday, the 18th of October. It's about 20 past 3. And as you can see, we've got a bit of green on the front page of VectorVest USA, first green for a very long time. So it looks as if the relief rally that we've all been hoping for has started. It's certainly looking very optimistic. Market up after an inside day yesterday. Markets up 66 S&P points at 50 minutes into the trading day. The market action upwards looks impulsive to me, and that I think stands in some good stead for a relief rally that can run at least 3 or 4 weeks. That's certainly how I'm going to play it until it proves itself to the contrary. Let's have a look at some figures. As you can see, the buy-sell ratios come off the lows from 0.07 a week ago up to 0.17. Still a long way to go, and the MTI has moved up as well, and the short-term measure of the trend is up. Underlying trend still down, and the longest term measure of the trend is going to take a bit of shifting. That's a confirmed down, and we've got a green light. Well, we're 50 minutes into the day. That can change by 9 o'clock tonight, but we've got a green light so far. Let's have a look at the VectorVest composite. That's the VectorVest composite, folks, over the last 6 months. And if I put on the longest term measure of the trend, called confirmed calls, we can see that we had a bit of a rally in July, August, but all year the major legs have been down, then a couple of little legs up, as I said, this has still got a little bit of work to do before we get it confirmed up. Quite a bit of work to do, in fact. Last Thursday's emphatic outside day was useful, and then we had a pullback. And guys, the low of the pullback that I think we had on Friday, that was exactly 62% of the upswing. So in Elliott terms, that was a wave 1 up. This is a wave 2, and we're now starting to see a wave 3 up, which is an impulsive move in my position. We've also got a little bit of an island. We had a gap down, a gap up, a lot of days in between, so maybe technically it should be discarded. Nevertheless, that's quite a positive pattern for me. So where's it going to go to now? Well, let's have a look at the rest of the market timing systems first. The DEW, which is a medium-term market timing system, is still down, although it's got, this is how it's actually measured, this moving average, a weighted moving average, and the markets in fact closed above that moving average today, but the momentum indicator, which is also a part of the study, the DPO, detrended price oscillator, needs to get up through 0. It's going to take another day or two for that to happen, but very, very close. If this momentum is maintained, we're very, very close to a DEW up signal, where I shall be looking for some positions, and I'll do my best to report them here. If we now have a look over the last 3 months, have a look at the shortest term measure of the trend. That's the primary wave, and that turned up yesterday. Okay, the primary wave, in fact, turned up yesterday at the close in that inside day. And I was rather disappointed this morning because I was actually out of bed early to try and buy the breakout of the outside day long, or the break of Friday's high, and I felt if it got through those two levels, the market would move up significantly, but I was too late. I was out of bed at about 6:30 UK time, but that was already too late. The overnight market had already moved at 3 o'clock in the morning or something, so I haven't got a position now at all as yet. It was a long way of the day to go. So if we now do look at the S&P itself, that's the S&P itself, and the S&P also showing this gap down, gap up, big move up, market opened on Thursday after the CPI number, pulled everybody short, and then rammed the other way. There must have been a lot of blood in the streets in there. And then it pulled back to 62% of that, and it's now pushing up. So where do I think this is going to go to? Well, if we put on a fib between here and that low, and I think that a reaction or a relief rally should at least get to 4,000 on the S&P. And it could easily get up here to 4,150 or something. That's 78% retracement. And these relief rallies tend to happen fairly quick and fairly hard as positions are unwound here. There's an awful lot of people found themselves in a short strangle. But market coming back a little bit now. We're not out of the woods here yet, but I think it's looking quite good for a relief rally. Okay, I'm going to do nothing until that DEW signal prints, and that DEW signal could take a couple of days as yet. So I'll give it the benefit of the doubt until we get a DEW signal. There's the DEW. As you can see, no signal as yet. Signals are clear. Signals are objective. There's no head scratching to try and work out whether you should be buying stocks or not. When you decide on your market timing system, and for me, I use the medium term one, this DEW, it's cut and dry. No scratching or whatever part of your anatomy you have to scratch to make a decision. In the short-term trading, a bit disappointed that got away on me this morning because there's 100 points on the upside there. What can you do? So folks, the UK is following. I haven't done anything. I haven't added any positions in the UK. UK has got a little bit more work to do than the American market for the DEW to turn up. Again, I should be adding to positions in the UK when that happens. I did a video this morning for UK customers, and that'll be on the UK YouTube page, VectorVest YouTube page, probably this afternoon, where I look at 4 stocks that I think should move. I hope you find that useful, folks. Steady as she goes, but looking very positive for a relief rally that can last well into November. Thanks very much.